Good morning everyone. I am Sabita Sapkota. My student ID is EMB24747 and today I am here to present on the topic raising funds for corporate operation and liabilities, provisions, contingent liabilities and contingent assets. So any companies, either big or small, private or public, needs fund in order to conduct different portfolio and processes, and funds fulfill the liabilities portfolio, financial shortcomings and enhancement in business performance. But obtaining funds, identifying and implementing the effective ways in order to obtain the funds is not as simple as we think. Now moving to the next topic, companies and their funding sources. I have selected two companies for the study of their funds and procedures taken to create fund: Evolution Mining and CBP Contractors. Evolution Mining is a mining company based on the Australian grounds, and CBP Contractors are based upon the construction of infrastructures and physical assets. Both of the companies used internal funding and external funding. Internal funding are acquired within business activities and earnings, that is cash profits, revenue from the customer and investments. And in external funding, they are acquired assessing different fundraising programs and seeking out different external funds. First one is bank overdrafts and other liabilities. The second one is fair value and share-based reserves, and the third one is share issues. Now moving to the next topic, evaluation of sources of funds. For Evolution Mining, the primary funding is from the issued capital, which is the collection of funds. The company showcases the position of its liquidity within the study of its cash flow prediction, and had the contingent liability of claims and bank guarantees in time frame of 30th June. And for CBP Contractors, the primary funding is from the issuance of shares with share capital of 1,750 million in 2018, and the long-term liability raised to 1,048.9 million in 2018 and 1,277.2 million in 2017. Now another topic is internal and external source of percentage. For Evolution Mining, the internal funding was $323,226,000 and $37,385,000 in year 2018 and 2019, whereas the external was $150 and $129,000 in the year 2018 and 2019. So the percentage of internal to external source of funding is 80%, and the percentage of external funding is 20%. While for CBP Contractors, in case of CBP Contractors, the percentage of internal funding with respect to the external is 18%, with internal amount $2,141.7 and $1,813.8 in 2018 and 2017. So the percentage of external funding is 82%. Moving to merits and shortcomings, both companies have acquired similar type of fundings. However, such fundings have advantages and disadvantages as well. The internal funding is quite beneficial as they can be acquired instantaneously and also does not affect the third parties, but makes the fund acquired be limited amount, which brings in shortcomings in the debt payment. However, external funding brings in heavy incurrence of amount with the name of interest, and the benefit is that it can bring in different skilled investors on board who can be a huge benefit for the organization. Now the other topic is liabilities in the company. For CBP Contractors, the liability in the company are trade payable, trade tax liabilities, provisions, interest bearing liabilities, different tax liabilities. And in case of evolution mining, the liabilities are trade and different payables, interest bearing liabilities, current tax liabilities, provisions, different other liabilities, different tax liabilities, and non-current tax liabilities. Now, talking about the provisions, contingent liabilities and contingent assets. In the aspect of AASP 137, the provisions will be identified when the business has an obligation. Similarly, the prospect of contingent liabilities in regards of AASP 137, it is opened, which is unless the possible outflow in the resumes is embodied with the certain financial benefits remotely. Finally, the contingent assets in accordance to AASP 137 is probably arising with no expectation and other unassessed events. So the another topic is reference to AASP 137. In CBP contractors, the requirement for the amount to recognize with accordance for the line of AASP 137 is not seen. However, in evolution mining, it has also not incorporated the standards of AASP 137 in its annual report recording. Now, I'll be talking about the asset categories. According to the balance sheet shown in the appendix, the asset in CBP contractors and evolution mining are enlisted in the category of cash, different cash equivalents, trade and other receivables, inventories, distinguished to consumable and distributable assets held for sale, investment, property, plant and equipment, and intangibles. And for evolution mining, listed as cash and cash equivalents, trade and other receivables, inventories, tax receivables, property, plant and equipment, and mine development and exploration. Now, measurement basis. Both the companies have similar basis of measurements. The assets are recorded on the basis of cash and different equivalents of cash like bills and money drafts. Property, plant and equipment are recorded as the physical value owned by the company, which is in basis of the value being acquired with the deduction of depreciated amounts. Similarly, different intangible assets like goodwill and patents are stored in the monetary value which they might create for the company. Finally, to conclude, after analyzing the two different companies of Australian grounds, they both used internal and external funding and different advantages and disadvantages also. Also, the provision, contingent assets and contingent liabilities also was assessed as in standard of AASP 137, but evolution mining did not utilize such standards in recognizing the portfolio.